Can you hear me now?
Hello.
Yes, sir.
You can hear. See what where we.
Time. Is it the same? See the last lecture notes. Are we into this or the previous? Let's see. I think this we have completed. Say yes, no.
Yes, sir.
I will like someone.
Yes, sir.
Hello. Okay. Shall we get to the next one? I think we were here, right? Just see the last lecture notes. Right? I just want to confirm from your side.
Yes, sir.
Yes, sir.
Yes. Thank you. Okay. Come to point number 3. Risk or quality of benefits or adjustment for risk. Now tell me, looking at both the projects, project A and project B, which project is better? I would like to hear from your side.
B.
Yes, sorry?
D.
B is far better compared to A. See the second sentence given there? A more certain and uniform return means higher quality of benefits. For project B, in all 3 years, we are receiving at the rate of 200 CR. Right? Okay. But in case of project A, first year we are not receiving anything, second year we are not receiving anything, third year we are receiving 600 crores. See the conclusion given? Shall we get into the conclusion? What is the conclusion? As per the above table, the profit maximization is the objective of 2 projects are of equal importance. Underline the next sentence. The cash flow from project B is certain, very, very clear and equal, and therefore project should be accepted. On the contrary, in project A, the cash flow is uncertain and therefore project A should be rejected. I think it is so clear. Anyone has any confusion regarding the conclusion written? I presume everyone has copied the table, right? Everyone has copied this table. Say yes, no.
No, sir. 2 minutes.
Okay, copy the table, full table, so that there is no confusion then. Done? Say yes, no.
No, sir. 2 minutes.
Boys, done?
Yes, sir.
Yes, thank you. Now come to the conclusion. As per the above table, if profit maximization is the objective, put a comma. The 2 projects are of equal importance. Why? We are receiving 600 CR from both the projects. But the cash flow from project B is certain and uniform, and therefore project B should be accepted. On the other hand, on the contrary, in project A, the cash flow is uncertain and therefore project A should be rejected. I think it is so clear. Okay, now we are coming to the topic. I gave you that introduction about profit maximization just to get a clear understanding about shareholder wealth maximization or shareholder value creation. Can someone tell me why it is given shareholder value creation? What do you understand from the heading? Shareholder value creation. Can someone respond from your side? Maximize the market price of the equity shares. Means the purpose of the organization should be to maximize the market price of their equity shares in the stock market, stock exchange. I repeat, shareholder value creation means maximize the market value of their equity shares in the stock exchange or in the capital market. Okay, now come to the point. Due to the limitations attached with the profit maximization as the objective of finance function, it is no more accepted as the basic objective. Please underline MCQ. It is no more accepted as the basic objective. Underline the next sentence. There also put MCQ. The objective of shareholder wealth maximization is superior to profit maximization objective because it takes into account the following three aspects simultaneously. Simultaneously means at the same time. What is the first aspect? We use a precise concept. What is the precise concept? We should be using cash flow. We are coming to that. We will see the equation soon. What is the second aspect? We must take into account the time value of money, TVM. And we also must make the adjustment for risk. Three aspects. We should use a precise concept. We should take into account time value of money. And we should also make the adjustment for risk of the project. Okay, now how it is given. Point number one, application of a precise concept. Why do we say that? In wealth maximization criterion, the benefits associated with the assets are measured in terms of cash flows rather than accounting profit. In simple words, the business or project decisions should be analyzed based on cash flows instead of profit. Because cash flow is a precise concept with a definite meaning, put a full stop, there is no need of next sentence. I repeat, up to definite meaning only. I repeat, in wealth maximization criterion, the benefits associated with the assets are measured in terms of cash flows rather than accounting profit. In simple words, business or project decisions should be analyzed based on cash flows instead of profit. Because cash flow is a precise concept with a definite meaning, put a full stop, close it there. Okay, this is done? Yes. Okay, we will see each point one by one. And we will also see the equation for cash flow soon. This is done? Say yes, no?
No, sir, just a minute.
Up to where? Definite meaning. Because cash flow is a precise concept with a definite meaning. Cash flow is a precise concept with a definite meaning. Cash flow is a precise concept with a definite meaning. Put a full stop, don't look at the next sentence at all. Should I get into next PPT? Girls, respond now. Done? Say yes, no. Done? Boys? Done? Say yes, no.
Sir, can you read the last line? We can't see after deficiencies.
I read out in simple words. I'll go slowly. In simple words, business or project decisions should be analyzed based on cash flows instead of profit, because cash flow is a precise concept with a definite meaning. Must. No need of the next sentence. Based on cash flows instead of profit, because cash flow is a concept with a definite meaning. I repeat again. In simple words, business or project decisions should be analyzed based on cash flows instead of profit, because cash flow is a precise concept with a definite meaning. And bracket write down MCQ. No need of next sentence. Okay. I'll get to the next PPT. Now you want to have the equation for cash flow. Now tell me why the word free cash flow is given instead of cash flow. Can someone give me the answer? Read the equation carefully. Let us say your profit after tax is 100 CR. Pat. That is how much? 100 CR. Your depreciation and amortization non-cash charges is another 100 CR. 100 plus 100, 200 CR. Let us say out of 200 CR, this year you have bought asset worth rupees 50 CR, increase in capital expenditure 50 CR. And increase in working capital is another 50 CR. 200 CR minus 50 plus 50, 100 CR, you get the free cash flow as 100 CR. I think you got a clear idea. If you are the owner of the business, in order to calculate the free cash flow, if you are the owner of the business, you are interested in knowing how much amount is coming to your pocket. For example, your PAT is 100 CR, non-gas charges another 100 CR, 100 plus 100, you have made 200 CR. Out of 200 CR, you have invested under capital expenditure 50 CR, under increase in working capital another 50 CR. Therefore, free cash flow is equal to only 100 CR. What do you mean by free cash flow? The entrepreneur's cash flow, owner's cash flow, what he got in his pocket. This is the way to remember. What is free cash flow? Entrepreneur's cash flow. In simple words, the value of the business should be calculated based on discounted free cash flow models rather than profit-based model. Bracket right MCQ. The value of business should be calculated based on discounted free cash flow models or free cash flow models rather than profit-based models. Please write down in bracket MCQ. This is all about cash flow. I think it is clear to you. Anyone has any confusion regarding this equation? Why the word free cash flow? It tells you what is there in your pocket. What is the actual net amount you have received as the owner of the business. Okay, come to the next point. Adjustment for time value of money. This we have seen in detail. Anyway, we have to write the summary here. Value maximization criterion takes into account the time value of money. In other words, wealth maximization denotes maximization of net present value. I presume you all remember the equation for net present value. Net present value is equal to PV of cash inflows minus the PV of cash outflows. You know it. That is why, while computing the value of total benefits, the cash flows are discounted at a particular discount rate, and a financial action which has a positive net present value should be accepted, and vice versa. If someone asks you why we are following the NPV method or internal rate of return method, or profitability index method? In order to analyze a business decision, the answer is we have to make the adjustment for time value of money. Whenever you take a business decision, you have to make the adjustment for time value of money. In simple words, wealth maximization denotes maximization of market value of company's equity shares. Please underline. While copying, please underline. In simple words, wealth maximization denotes the maximization of market value of the company's equity shares. What is the next step we have to do? Adjustment for risk. It also recognizes the concept of risk. How? By making necessary adjustment in discounting rate, and therefore cash flows of a project involving higher risk are discounted at a higher discount rate and vice versa. I think it is clear to you. Therefore, from today, if someone asks you, what should be the equation for discount rate, you will say it has two components. First component is the risk-free rate, and second component is the risk premium. If the risk premium of a particular project is higher, you will have to use a higher discount rate in order to calculate the NPV of that particular project. Now you might ask, after using a higher discount rate, if you get a positive NPV, I repeat, after we use a higher discount rate, if we get a positive net present value, we must accept that project because higher the risk, higher the return. I repeat, according to the riskiness of the project, you should adjust the discount rate. Therefore, from today, your equation for discount rate is what? Risk-free rate plus risk premium. Now, if someone asks you, why do we take risk-free rate? To adjust the time value of money. Why do we take the risk premium? To make the adjustment for risk. Now, see the explanation, that one sentence explanation is more than enough. It also recognizes the concept of risk by making necessary adjustments in discounting rate, and therefore the cash flows of a project involving higher risk are discounted at a higher discount rate and vice versa. I think this is so clear to you now. Right? Done? Say yes, no? What is the last line? Discount rate is equal to risk-free rate plus risk premium. Discount rate is equal to risk-free rate plus risk premium. Done? Should I get into next PPT? Say yes, no?
Just a minute, sir.
Yes, thank you. Now, straight away get into the MCQ questions related to the topics. While writing the question itself, please give me the answer. Okay, question 1. Tell me the answer for the question 1. Question 1. Girls, tell me what is the answer for the first one. Boys, respond now. Corporate finance involves?
Sir, all of the above.
All of the above. Very good. Write the short form IFD. What is IFD? It includes investment decision. In a layman's language, what do you understand by investment decision? The asset side of your balance sheet. Financing decision. Which side of the balance sheet? Liability side of the balance sheet. Right? Then the dividend decision. All three decisions are to be covered under corporate finance. Okay, next. Investment decision is also known as tell me the answer. Investment decision. Tell me. What is
Sir, all of the above.
All of the above. Yes, done. You have studied a particular topic under strategic management, policies in functional areas. There you have come to financing policies, financial policies. You have used this terminology, capital allocation decision. Investment decision is same as capital allocation decision. What is the opposite of capital allocation decision? See the next subheading. Under financing decision, you will see capital acquisition decision. Right? Capital acquisition decision. Capital acquisition decision. In marketing management, you have studied the ultimate objective is what? Customer acquisition, customer retention, and so on. In finance, you are going to say what? Capital acquisition. When you go on acquiring your capital, you are definitely going to grow the liability side of the balance sheet. When you grow the liability side of the balance sheet, automatically the asset side of the balance sheet also expands. Balance sheet expansion is the ultimate objective of your business. Right? Yes. Okay, financing decision, again, what is the answer? See, it is same as what? Financial structure decision, capital structure decision, capital acquisition decision. Therefore, what should be the answer? All of the above. All of the above. Should I get to the next? Say yes, no?
Yes, sir.
Sorry? Yes. Okay, come to the next now. I want to cover all the MCQs under this. Okay. When someone tells you project decision, you should not get confused. It is same as capital budgeting. When someone tells you backward integration, forward integration, business acquisition decision, it is same here, capital budgeting decision. It may be a foreign investment decision also. Therefore, again, there the answer is all of the above. Okay, now many will make the mistake in question number 5. Because you have studied dividend denotes part of profit. But when you write the answer, please make a note. The answer will be C there. Dividend decision involves the amount to be paid out as dividend plus the amount to be retained to support the growth of an entity. Therefore, the answer will be C rather than A. Both A and B. What can be the logical reason? Let us say your profit after tax is 100 CR. Dividend is 25 CR. Balance to be retained should be 75 CR. I think that is clear. Now see the other terminologies for RE. See the spelling very carefully. Internal accruals. ACCRUALS. Internal accruals is same as internal financing. Why internal financing? You should expand your business by reinvesting your own profit. I repeat, why internal financing? The corporate should expand their business by reinvesting their own profit. Internal financing. What is the other terminology for internal financing? Internal surplus. Internal surplus. Internal accruals, internal financing, internal surplus, all means the same. Therefore, again, all of the above. Done? Say yes, no?
Just a minute, sir.
Done. Thank you. Girls, respond now. Say yes, no? Why keeping a low profile? I would like to hear from you. Done? Say yes, no?
No, sir.
Any confusion regarding anything there? Just let me know. 5, what is the answer? C is the answer. 6, what is the answer? D is the answer. 4, D is the answer. D, C, D. D, C, D. 4D, 5C, 6D. Now done, right? Yes. Should I get into next PPT? Because the other group is ahead of you. Because last week you lost maybe 30 minutes, 40 minutes. Therefore, please pick up the pace. Done? Say yes, no. I would like to hear from your side.
Yes, sir.
Yes. Okay, come to the next now. Wealth maximization objective is superior to profit maximization objective due to the following. Number one,
All of the
application of a precise concept that is cash flow. Application of a precise concept that is cash flow. Adjustment for time value of money. Then adjustment for risk.
All
Which
of
is
the
the
above.
answer there?
All of the above.
All of them. Done. Very good. Next. The discount rate used for discounting cash flow is a reflection of.
C.
Which is the answer there?
Both A and B.
C is the answer. Yes. Both A and B above. C is the answer. Yes. Now come to the next. Wealth maximization principles aims at maximizing. Number one, market value of equity shares of a company. Number two, the fixed assets of the business. Number three, the profit of the business. And last, none of the above.
A.
A is the answer. Yes. A is the answer. A is the answer. Done? Say yes, no. Done, no?
Yes, sir.
Thank you. Now, see the next heading. Short notes based on your past question papers. Okay? We will see each one in detail so that you have no confusion. What is the topic number one? Financial statement analysis. Now it will be clear to you. You have studied funds flow statement. You have done cash flow statement. You have done ratio analysis. You have done comparative horizontal financial statement. Then common size vertical financial statements. All these 5 techniques will fall under which category? Techniques or tools of financial statement analysis. While copying, please underline. Techniques or tools of financial statement analysis are how many? 5. I think it is clear. That is why we have done each chapter in detail, one by one. First we did ratio analysis, then we did funds flow statement, then cash flow statement, comparative horizontal financial statement, common size financial statement, or common size vertical financial statement. All will fall under one heading, techniques or tools of financial statement analysis, bracket right MCQ. MCQ. Okay, next B, there also put MCQ, who are going to be the users of your financial statement analysis. This is self-explanatory. Management, the suppliers of your raw material or the equipment, the shareholders or owners of the business, investors, lenders, government and its agencies, stock exchange, customers, and a research person. I think this is self-explanatory. Again, write down MCQ. MCQ. I repeat, against capital A, techniques or tools of financial statement analysis, put MCQ. Uses of financial statement analysis, put MCQ. I think this is done. Say yes, no. How many methods under techniques or tools of financial statement analysis? Put there bracket, write five techniques. If you cannot remember A, B, C, D, E, there you write 5 techniques. Five are there. Okay. Should I get into next PPT? Say yes, no? I would like to hear from someone. Okay. Should I get into next PPT? Say yes, no? Boys, tell me, should I get into next PPT? Say yes, no? I would like
Yes,
to hear
sir.
from someone. Yes, thank you. Next, another MCQ. What are the limitations of financial statement analysis? Should I get into next PPT? Say yes, no? Where do we commit that I get into next PPT? Make the balance sheet according to the purchase price or cost price. Book value. Are we going to take into account the market price? I would like
Yes,
to hear
sir.
from someone to account the inflation in the balance sheet. Next, another MCQ. Price level changes. What are the limitations of financial statement? Price level changes, bracket right, inflation. Should I get into next PPT? Say yes, no? For inflation. Where do we commit that I get into next PPT? Make the balance sheet according to the purchase price or cost price. Indra and Indra firm combined book value not possible. Are we going to take into account the market price?
Yes, sir.
Next, another MC price level changes. What are the limitations of financial statement? Price level changes, bracket right, inflation. I think this is self-explanatory. Should I get into next PPT? Say yes, no? For inflation. Where do we commit that I get into next PPT? Make the balance sheet according to the analysis of financial analyst. Indra and Indra firm or book value not possible. Are we going to take the analysis of financial statement?
Yes, sir.
Next, another MC price level changes. Price level changes, bracket right, inflation. Should I get into next PPT? Say yes, no? For inflation. Where do we commit that I get into next PPT? It ignores the human capital, right? It ignores the human capital. Next, it is not helpful for budgeting and forecasting. And last, lacks accuracy. These are limitations. If they ask you what are the limitations, again write MCQ. Again write MCQ. Okay, this is done. Say yes, no? someone? These are simple topics. I don't want to leave this also. Right? Done? Say yes, no?
Yes, sir.
Thank you. Next short note, they might ask another question. Bracket write ratio analysis. This is from ratio analysis. DuPont analysis. Please write down in bracket ratio analysis. Okay. This again based on your previous year question paper. Okay. Why it is named as DuPont analysis? See the first sentence. It was developed by DuPont company. Okay. Thereby they have put the name as what? DuPont analysis. Now see the next sentence. The breakdown of this ratio into three components model is the simplest form of DuPont approach. Please underline three components model. Bracket write MCQ. Now you might ask, what is three component model? Don't worry about it. I have taken a simple example also so that it will be clear to you. Means from today, if someone asks you, what is DuPont ratio analysis? You will say, you are integrating, you are combining three ratios in order to calculate return on equity. Please underline first sentence ROE. Please write down in bracket the short form ROE. I repeat, DuPont analysis was developed by DuPont company to analyze ROE, return on equity. Bracket write MCQ. The purpose of doing this analysis is to calculate ROE. The breakdown of this ratio into how many? Three component model. Okay. Now tell me what is first ratio given? Net income ratio. In hospitality industry, we will not say net profit, we say net income. Net income ratio is equal to net income upon net revenue into 100. What is net revenue? Net sales. If anyone is getting confused, net revenue in bracket, please write down net sales. If anyone is getting confused with the net income, please write down in bracket net profit. Net profit upon net sales into 100. Now you conclude from today, you should not look at this particular ratio alone. From today, you should not simply talk about net profit ratio. Why? See the conclusion given? This ratio ignores the money invested by shareholders to set up the business. Please underline. If someone asks you what is the main disadvantage of net income ratio, what is the main demerit of net income ratio, your answer should be this ratio ignores the money invested by shareholders to set up the business. Now, how do you overcome this limitation? See the next ratio? You must look at the investment or asset turnover ratio. Net revenue upon average assets. Net revenue upon average assets. Okay, now I have a request. I would like to ask you the question, don't simply copy. Will you put or will you multiply this with 100? Say yes, no. I would like to hear from someone. This ratio you have already done. I repeat, investment turnover ratio is always indicated in?
Absolute.
No. Refer back the ratio analysis chapter. Turnover ratios must be indicated in number of times. In many textbooks, the ratio is given this way. You should not get confused. Your answer should be net revenue upon average assets. No multiplication by 100. Just to focus on that point, I have put deliberately this. I repeat, by mistake, don't multiply this by 100. See the earlier notes you have written? All turnover ratios must be indicated in number of times. You have already calculated inventory turnover ratio, receivable turnover ratio, payables turnover ratio. See the answers? PTR. After PTR, you found out APP. After RTR, you have found out ACP there. After STR, stock turnover ratio, you have found out this stock storage period. Remember ratio analysis chapter? Therefore, by mistake, don't multiply this by 100. I repeat, someone might be sleeping there and multiplying by 100 and you will say, it is there in the handout, don't say that. Investment turnover ratio equation is net revenue upon average assets. Matrix over. What is the main disadvantage of this ratio? Tell me. What is the numerator? Net revenue, not net profit. This ratio ignores the profit generated by the use of assets. or investment made by whom? Shareholders. Very, very clear now. This ratio ignores profit generated by the use of assets. Therefore, what we have to do? Tell me. Therefore, both the above ratios are to be combined. How we are going to combine? Before that, just say, both the above ratios ignores the trading on equity or financial leverage or equity multiplier on the net income or EPS. Now I would like to ask someone, what is financial leverage? If someone asks you, you have done this under capital structure planning, financial leverage. You give me the answer in a layman's language. I don't want any definition, textbook definition. In your own language. Financial leverage denotes use of borrowing, use of debt to maximize EPS. Those who have forgotten about financial leverage, kindly write. Financial leverage denotes use of borrowing or debt to maximize the EPS. I repeat, financial leverage denotes use of debt or borrowing to maximize the EPS. Therefore, you have to use the equity multiplier. See the next ratio? Equity multiplier. Why it is called equity multiplier? Denominator is equity. Denominator is equity, numerator is the average assets. Therefore, ROE, return on equity, should be the combined effect of all the above three ratios. I repeat, in order to calculate ROE, return on equity, we have to combine all three ratios together. That is the secret of DuPont analysis. Okay, we'll come to the calculation slowly. For time being, try to think this way. Underline the last sentence. Therefore, return on equity is equal to, what is the first ratio? Net income ratio. What is the net income ratio? Net profit ratio. What is second ratio? Asset turnover ratio. What is third ratio? Equity multiplier. Equity multiplier. Why equity multiplier? To give the effect of financial leverage. What is financial leverage? Use of borrowing, use of debt to maximize the EPS. I repeat again. Financial leverage denotes use of borrowing or debt to maximize the EPS. Okay, when we come to the example, it will be clear to you. For time being, try to think this way. There are three ratios which are to be combined together in order to calculate the ROE. And this is called the practical approach for calculating the ROE, return on equity. Done? This is done? Say yes, no?
Yes, sir.
Yes. Thank you. Now come to the next subheading. Okay, we will come to the example regarding overtrading. Example regarding DuPont analysis slowly. Before that, we will complete some more short notes. Then we will come to the MCQ. Under MCQ, I have put a direct question on DuPont analysis. Therefore, don't worry about the numericals on this. We will see today itself. There is time. Okay, we will come to that. Okay. Okay. I'll get to the next subheading. Right? Overtrading and undertrading. Just write in bracket, this is from working capital management. You have done the topic working capital. From the past year question paper, I have noticed they have asked another simple question on this overtrading, undertrading. Now, I presume everyone has completed this. Say yes, no. Boys? Say yes, no. DuPont analysis done?
Yes, sir.
Yes. Now give the next subheading, overtrading and undertrading. Now you ask yourself, let us say next year you are going to start your own business. I repeat, next year, 1 year down the line, you are going to set up a restaurant or hotel of your own. What is going to be the main constraint for you? Money, cash. So the first sentence given, overtrading means a situation where a company does more business than what its finances allow. I think it is very clear to you. 1 year down the line, if you are going to start a business of your own, you will get into a scenario which is called overtrading. There is nothing wrong in that. You are doing the right thing. Okay? See the next sentence. It is related to the cash position of the business or enterprise, and it occurs when the company expands its operations with insufficient cash resources. And it occurs when the company expands its operations with insufficient cash resources. See, 1 year down the line, your age is only 21, 22. When you set up the business of your own, definitely you are going to face the problem. That is called overtrading. That time, don't get confused. Okay? Overtrading means a situation where a company does more business than what its finances allow. It is related to the cash position of the enterprise, and it occurs when the company expands its operations with insufficient cash resources. Causes of overtrading, inflation and rising prices. After you start the business only, you will come to know about or you will start thinking about the inflation and rising prices. Right? When you start purchasing the raw material, when you start purchasing the equipment for your business, you will come to know what is the inflation percentage on annual basis. So the next, high incidence of taxation and related expenses. When you set up a business of your own, in the initial stage, you will pay more tax to the government. You will not follow tax avoidance or tax planning practices. That makes a situation of overtrading. So the next, increased lockup of funds in inventory. If anyone is getting confused with the word inventory, bracket write stock. Stock. By mistake, you will go on purchasing raw material and accumulating. Then you will get into a situation called overtrading. Last, liquidity issues due to overexpansion or growing too fast. Very, very clear it is. You are going to face liquidity issues in the initial stage. Therefore, you should simply relax. US is a new business. Definitely, you are going to face the liquidity issues. And if you can manage liquidity issues without any legal complication, definitely you will survive in the field. I think it is very, very clear to you. Now tell me, what should be the opposite concept of overtrading? Undertrading. Which is better for you? Which is better for you is overtrading. Because your return on investment will be maximized. Return on equity will be maximized. Even though you will be facing some business problems on day-to-day basis. Related to what? Liquidity. Related to what? Increasing prices. Related to what? Paying taxes to the government and so on, so on. I think this is so simple. This concept is so simple. Okay, should I get into the opposite concept, undertrading? Say yes, no? Because after this, we have to get into the MCQ. Done? Say yes, no?
Yes, sir.
Thank you. Undertrading, just opposite. Undertrading is just opposite of overtrading, where the funds of a company are not utilized fully because of inefficient management. You are not going to be inefficient because you are going to invest your own money, your hard-earned money. Therefore, you are going to face the scenario of what? Overtrading rather than undertrading. I think it is very, very clear. Okay. When do you say your business is facing this scenario? Too much amount invested in current assets. What do you mean by current assets? Too much receivables from your customers. Your customers will be using your money for their personal purposes. As early as possible, you should collect the money from them. And too low amount due to creditors. What does it mean? Unless they make 2-3 phone calls, you will not make the payment. That is the business principle. As an young individual, you might think this way, you must pay on due date. In business practice, that doesn't happen. See what is given? Too much amount invested in current assets and too low an amount due to creditors will be the symptoms of undertrading. What are the causes? deflation and decreasing prices, inefficient management, I think it's self-explanatory, low incidence of taxation and related expenses, and last is what? Under expansion. Therefore, if someone asks you what is the ideal scenario, you will say overtrading. You might be under stress little bit, you might be under little tension, but overtrading is always advantageous for you because your return on investment will be maximum there. Return on equity will be maximum there. This is another short note which they have asked in the past years. Okay. Okay. This is done. Say yes, no?
No, sir.
No. Okay, no problem. I'll wait, but make it perfect. And when you refer the textbook, 3-4 page notes will be given on this. Don't bother about this. This short note will serve the purpose. Okay, don't waste your time. Focus on what is given. This is more than enough for a hotel management student. Okay. Yes, done. Say yes, no?
Yes, sir.
Yes. Okay. Now come to the next. Next short note. Financial planning and financial plan. If someone asks you what is financial planning, nothing. It is a formulation of financial plan. This topic you already done. Only thing you have not used the terminology financial plan. You have done capitalization. You have done capital structure. Right? Okay. See how it is given. Financial plan involves the decision about 3 aspects. I repeat. Financial plan involves the decision about, if you want write down there, decision about 3 aspects. I have not written that there. I have written financial plan involves the decision about. Kindly add what? 3 aspects, not 4 or 2. 3 aspects. What is the first aspect? Capitalization. Right? What is capitalization? The total amount to be invested. Right? Total amount to be invested for implementing the business plan. Total amount to be invested or total amount needed for implementing the business plan. Right word is total amount to be invested. I repeat, capitalization, that is the total amount to be invested for implementing the business plan. Okay, capital structure, you have done a chapter on capital structure here. What does it mean? It's a firm and proportionate amount of corporate securities to be issued to raise the required amount. I think it's so simple for you now. Right? Because since you have done an essay on this one sentence is nothing for you. Next, third aspect, financing policies to be pursued for the issue of corporate securities with a special attention to WACC, weighted average cost of capital. It is same as the cost of capital. And also the second aspect, the time of issue. Means when you take into account all 3 aspects together simultaneously, capitalization, capital structure, and financing policies simultaneously, you call it what? Financial plan. I repeat, what is the definition? Financial plan involves the decision about 3 aspects. Please write down there 3 aspects. I have not written it there. Financial plan involves the decision about 3 aspects. Please put double line below 3 aspects. That is capitalization, capital structure, and the policies. If you want, write down in bracket CCP. CCP. What is the first C stands for? Capitalization. What is second C stands for? Capital structure. What is P stands for? Policies. What policies we are talking about? Financing policies. CCP. I repeat, financial plan involves the decision about 3 aspects. CCP. What is the first C stands for? Capitalization. What is capitalization? Total amount to be invested. You are thorough with that. Second is what? Capital structure. You know what is capital structure very well. What is third aspect? Financing policies. When you integrate all 3 together, you call it what? Financial plan. Now, when you make a financial plan for the business, why an organization makes a financial plan? It must have adequate funds. See the first one? A financial plan should ensure the availability of sufficient funds to achieve the enterprise. So simple, self-explanatory it is. Since you have done capital structure planning, capitalization in detail earlier, this is nothing for you. Okay, this is common sense for you now. Right? This is done. Say CCP. Okay. Someone from your side should repeat what is C stands for. First C. Someone from your side. Are do some social service for others.
Capitalization.
Capitalization. What is capitalization? Total amount to be invested. Total amount to be invested. What is capital structure? The type and proportion. What do you mean by type? The form and proportion or proportionate amount of securities. What is third? P. P for what? Policies. What policies? Financing policies. Okay. Then the objectives. First, it should have adequate funds. Okay. Should I get into next PPT? Say yes, no? Yes, no.
Yes, sir.
Thank you. Next, balancing of cost and risk. What do you mean by cost here? Cost of capital. If someone is getting confused, please write down cost of capital. Balancing of cost of capital and risk of the project. Balancing of cost of capital. There should be balancing of cost of capital and risk so as to protect whom? The investors. What does it mean? Higher the risk, higher the cost of capital. I repeat, higher the risk, higher the cost of capital. There should be balancing of cost of capital and risk so as to protect the investors. Next is what? Flexibility. Flexibility. A financial plan should ensure flexibility so as to adjust as the financial requirements. A financial plan, you have studied about two instruments under flexibility. Factors that determine capital structure, flexibility. You will include what? CD. Can someone tell me what is CD stands for? CD, convertible. I would like to hear from you. Convertible.
Debentures.
Debentures. Convertible debentures. And redeemable preference shares, RPS. Convertible debentures and redeemable preference shares. Okay. Flexibility is already there. Okay, next. Simplicity. Financial plans should not be complicated by issuing variety of securities. So simple it is. Right? Yes. So simple it is.
Ari, yes. Oh, acha. Boo.
इसका स्विच भी चालू नहीं है. Okay, come to the next point now. Simplicity. Financial plans should not be complicated by issuing variety of securities. So simple. Next, long-run view, long-term view. The needs for funds over a long period should be considered while designing financial plans. So clear. You should not take into account 1 year as the time in order to make the financial plan. You must take into account at least next 10 years time. Next is what? Liquidity. The liquidity of funds should always be kept in mind while preparing a financial plan. Liquidity of funds should always be kept in mind while preparing a financial plan. Right? Because we have already seen this. If you do not have liquidity, you won't be able to run any business. You have to pay to your employees on time. You have to pay the salary to the employees on time. You cannot tell the employees there is no liquidity for the business. Next is what? Optimum use. A financial plan should ensure sufficient funds for genuine needs. not unwanted things, for genuine needs. A financial plan should ensure sufficient funds for genuine needs. Your organization must say always, we have enough money for genuine needs. Next, economy. The cost of raising funds should be optimum by balancing cost and risk. Cost of raising funds is nothing, cost of capital. Cost of raising funds is nothing, cost of capital should be optimum by balancing cost and risk. By balancing cost and risk. By balancing what? Cost and risk. By balancing cost and risk. Yes. Okay. I think this is done. Shall we get into MCQs? Okay. This is done. Say yes, no?
Yes, sir.
Yes. Thank you. Come to the next now. Next short note. What was the first one? Tell me the first short note. Tools or techniques of financial statement analysis. What is second short note? Two-point analysis. What is third short note? Over-trading and under-trading. Fourth is what? Financial planning and financial plan. Fifth is what? Financial statements of companies. Financial statements of companies. Financial statements of companies. Now, someone might ask you to define financial statement, bracket right, first MCQ, first para. Financial statements are the basic, underline basic, they might put a hyphen there. And formal, underline formal. Basic and formal means through which the management of an enterprise make communication of financial information along with the select quantitative details. Okay, no need of one-page definition. This is the simplest definition. Financial statements are the basic and formal means. I repeat, underline the word basic, underline the word formal. Means through which the management of an enterprise makes communication of financial information along with the select quantitative details. Now, another MCQ they might ask. When the Companies Act was passed in India, latest Companies Act 2013, financial statements are given in which schedule of the Companies Act? Schedule 3. Financial statements are given under which section of Companies Act? Section 467. That is why one sentence I have put all three MCQs. The format or the specimen of financial statements has been prescribed in under section 467, Schedule 3 of the Companies Act 2013. There can be 3 MCQs on this, not 1, 3. What is the first MCQ? The format of financial statement is given in which section of the Companies Act? Section 467. The format of financial statement is given in which schedule of the Companies Act? Schedule 3. Which is the latest Companies Act which we have to follow? Companies Act 2013. I repeat, put 3 MCQs. One is on Companies Act, which year? 2013, latest finance Companies Act. Next is about schedule, Schedule 3. Next is about section 467 of Indian Companies Act 2013 gives the format of financial statement. I think it's given. Next, the format of balance sheet and profit and loss account should be as per Part 1 and Part 2 of Schedule 3 of the Act respectively. This is all about Companies Act which you have to learn. Okay? Around 500-page notes are there only on this. You don't bother about 500-page notes. You need just 2 paragraphs here. But don't forget this 2 para. Companies Act, latest one is what? 2013. Which schedule? Schedule 3. Which section? Section 467. The format of balance sheet and profit and loss account should be as per Part 1. Please underline Part 1. Then Part 2 of Schedule 3 of the Act respectively. I think this is done. Say yes, no? Yes, done? I'd like to hear from someone. Please hurry up. We should wind up on time. Boys, done? Say yes, no?
Yes, sir.
Thank you. Now, when someone tells you what is financial statement, don't simply talk about P&L and balance sheet. You have to talk about all five. Another MCQ. Complete set of financial, put double line below the word complete set. Complete set of financial statement include. Number one, statement of profit and loss for the reporting period. Please write down in the same manner with the subdivisions, because again it can be MCQs. What are the subdivisions of your statement of profit and loss account? Subdivision 1, profit or loss period. Subdivision 2, other comprehensive income for the period. Next year, 1 year down the line, when you take up the job, you will see the profit and loss account this way. You should not get confused. You will look at the net profit, that is subdivision 1. Plus, you will also see what? Other comprehensive income. I repeat, your profit and loss account has two components, not just one component net profit. First is the profit or loss. Second is the comprehensive income. Okay, the sum total of subdivision 1 and subdivision 2 above is called total comprehensive income. Please underline total comprehensive income, bracket right MCQ. Total comprehensive income, please write down in bracket MCQ. From today, what you will say? Your profit and loss account should indicate profit and loss for the period, other comprehensive income for the period, and also what? Total comprehensive income. Right? Three things. Profit or loss, other comprehensive income, total comprehensive income. Number 2, balance sheet at the end. Please put the word at the end, because you prepare the balance sheet on a particular date, because it's a position statement. Please underline at the end. Next, statement of changes in equity. Tell me what you understand by statement of changes in equity. Your company might have issued 100 lakh shares. Let's say this year you have bought back. I repeat, your company has issued 100 lakh shares. Your company has bought back 10 lakh shares from the market. The remaining shares will be only 90 lakhs. Remaining shares will be only 90 lakhs. It should indicate the number of shares issued during this year. It should indicate the number of shares bought back by the company during the year. Right? Statement of changes in equity. If you are getting confused, back to right equity shares. Equity shares for the period. Statement of cash flow is nothing cash flow statement. Globally, it is not known as cash flow statement. It is called statement of cash flow. We Indians say cash flow statement. When you go to New Zealand or Australia for further studies, you should say statement of cash flow. Last, notes. Please put double line below the word notes. Notes to the financial statement, working notes or notes to the financial statement, which are interlinked by accounting logic. Therefore, from today, when someone tells you complete set of financial statements, you must say it includes 5 aspects. Statement of profit or loss for the reporting period, balance sheet, statement of changes in equity, statement of cash flows, and the additional notes, which are linked or interlinked by accounting logic. Interlinked by accounting logic. Is it done? Say yes, no.
Yes, sir.
Thank you. Next, we'll come to the MCQs on all the short notes. I repeat, MCQs are all the short notes. Feature of financial analysis is to present the data contained in financial statements in which is the answer for question 1?
All of the above.
Question 2, I'll give you the hint now. Underline the word dynamic. When you copy, please underline the word dynamic. Question 3, when you copy the question, you will underline the word static. Static. What is the keyword there? Dynamic and static. Now tell me which is going to be the answer for question 3. Question 3. The answer will be B. Vertical analysis. You are taking only 1 year data. What about dynamic one? I'd like to have the answer from you.
Horizontal.
Horizontal analysis, because you are comparing the financial statements of 2 or 3 consecutive financial years. Therefore, dynamics. Which analysis is considered as dynamic? Horizontal analysis. Which analysis is considered as static? It is vertical analysis. Because normally for vertical analysis, you take only 1 year data. Normally for horizontal analysis, you will take several years of data. You will be comparing the financial statements of different or consecutive financial years. I repeat, 1, the answer is B. 2, the answer is A. And 3, the answer is what? B. D, A, and B. Done? Say yes, no? Boys, done? I'd like to hear from you. Done?
Yes, sir.
Yes, thank you. Next. Which analysis based only on 1 year's data? Tell me the answer. Which analysis based only on 1 year's data?
Vertical.
Vertical analysis, very good. C is the answer. Main objective of analysis of financial statement. You do ratio analysis, cash flow statement, fund flow, all. For what?
All of the above.
Sorry?
All of the above.
Yes, D is the answer, yes. Analysis of financial statement is significant for?
Option D.
All of the above, yes. This is all self-explanatory. Finish it off fast so that we can complete all the MCQs. And if you are lucky, you might be in the college in the November first week. Right? But I'm not sure. I don't want to comment about it much. But finish it off fast. We should not keep anything pending. This is done? Say yes, no? Boys, done? Say yes, no? Done or not? Should I get to the next PPT? Boys, say yes, no? Hmm?
Yes, sir.
Yes, thank you. When bad position of the business is tried to be depicted as good, it is known as, tell me. Read the question very carefully. This we have not seen earlier. When bad position of the business is tried to be depicted as good, it is called window dressing. C is the answer. Put a tick mark against C, window dressing. When the bad position of a business is indicated as what? Good, it is called window dressing. Next, main limitation of analysis of financial statement is what is the answer? D. D is the answer, all of the above. And tell me the last one, ninth one, which is the answer? Ninth one. Tell me, ninth one, what is the answer? Not financial statement, it is financial statement analysis. Put double line below the word analysis. Includes
All of the above.
all of the above, yes. Therefore, learn all the headings. Vertical analysis, horizontal analysis, ratio analysis, cash flow analysis, cash flow analysis. Instead of saying cash flow statement, you must say cash flow analysis. Why cash flow analysis? Q. We calculate the cash flows under how many categories? Let me test your memory. We classify the cash flows under how many categories? 3. O for cash flow from OA. I would like to hear from you. Cash flow from OA, operating activities. What is the second one? Cash flow from IA. IA stands for?
Investing activity.
Very good, thank you. Next will be cash flow from
Financial activity.
financing activities. Yes, financing activities. Therefore, it's called cash flow analysis. Why the other one is called funds flow analysis? Funds flow analysis. Because first you calculate increase or decrease in working capital. Increase or decrease in working capital. Q. Increase in working capital will appear as source or application. Increase in working capital will appear as application of funds under funds flow statement. And decrease in working capital will come as what? Sources of funds, right? You remember, I think. Why it is called horizontal analysis? You calculate absolute deviation and also what? Absolute is what? Deviation in INR, Indian rupee. What is relative deviation? Percentage deviation. You calculate the deviation not only in rupees but also in percentage. Right? Okay, this is all clear. Okay, should I get to the last PPT today? This is done?
Yes, sir.
Yes, thank you. Now, this is regarding DuPont chart. Question 1, put DuPont. How many ratios are combined? 3. Since you have already written the notes, no confusion. Now tell me the answer. I would like to hear the answer from someone from you. ROE, underline ROE, return on equity. 8% into 2 times. Tell me 8% into 2 times.
16,
15% into 1.5.
24.
24% is the answer. Very good. Thank you. Thank you. Put a tick mark against 24%. Just multiply all three ratios. Okay. Just multiply all 3. You will get ROE. Net profit margin into asset turnover ratio into total asset to equity ratio is nothing. Equity multiplier. Equity multiplier. Equity multiplier. Okay. Question number 11. Tell me the answer. 11 का आंसर बोलो. Question number 11. Which of the following best describes overtrading?
Option D.
Eh?
Option D.
D. D is the answer. Liquidity issue as a result of growing to quickly or fast, right? Yes, liquidity issues. What is the lesson from this? If you start the business 1 year down the line, as an entrepreneur, you are going to face liquidity issues. You will not get confused because you are operating in an overtrading scenario. Whenever a company operates in an overtrading scenario, there is going to be liquidity issues. Yes. Next, financial statement include which is the answer? 12th. It is not financial analysis, financial statement. I repeat, don't get confused between question number 9. What is question number 9? Analysis. Put double line below the word analysis there. We are talking about analysis. Here we are talking about what? Statement. Which is the answer? I would like to hear from someone. What is the answer?
All of the above.
All of the above. Thank you. All of the above. This is all about today's topic. Okay, last PPT for today. I should not trouble you much because your personal time already started. Right?
Sir, for tomorrow's test, theory is only there or sums will also come?
You practice both so that you will get full. Because if you don't practice numerical, you may not be able to attempt all the theory. I repeat, you should be good in theory and numerical so that you will be able to attempt all 25 questions. Theory questions are derived from numericals only.
Okay, sir.
Okay, nothing there to worry, just 4 topics. Let me check your memory. What are the 4 topics? Tell me.
Cash flow statement, fund flow statement, working capital.
And 4th, comparative.
Horizontal.
Comparative horizontal financial statement. Thank you, thank you. We'll wind up today. Everyone has finished this page. PPT, say yes, no. Once you finish this, we'll wind up today. Tell others to hurry up so that I can take the attendance and we can wind up. Done? This is done? Say yes, no.
Yes, sir.
Yes. Boys, say yes, no. I would like to hear from them. What happened to them? Good boys, kya ho gaya? What happened? I'm not getting into the next PPT. This is the last one. Done?
Done,
Just
sir.
a minute.
Done. Thank you. Thank you. Okay. Thank you. We'll wind up now. Okay.
Thank you, sir.
Thank you.
Thank you, sir.
Thank you.